An overview of Forex trading and investing strategies. Forex trading refers to an international, 24/7, over-the-counter, exchange market where currencies of different nations are bought and sold. Trading is always done in pairs, assuming the price of currency bought to go up and that sold to fall down. It is the largest liquid financial market, making it impossible for any single investor to influence the prices of currencies. There are two kinds of Forex investing strategies: technical analysis, fundamental analysis. Technical analysis. Technical analysis is mostly undertaken by small and medium-size investors. The technical analysis considers factors that are actually affecting the market rather than factors that can affect it. Thus, the price quoted reflects all the factors that have influenced it. The only market-generated facts and figures are taken into account, and factors like fear, hope, expectations or other changes are not considered. Thus, the analysis is generally based on these suppositions. Price reflects all actual market movements. That means the price includes everything known to the market, like supply and demand for foreign exchange, political factors, trade agreements, etc. It is not concerned with what resulted in change, rather deals with actual changes. It works on the assumption that price can take only one of the three directions: upward, downward, sideward. It rests on those market patterns that have been identified as significant. That means those factors which are repetitive in nature or will produce desired results. History always repeats itself, as human psychology changes very slowly with time. That is, market movements are predictable. Various technical indicators are: 1. Relative strength index. It takes into account the ratio of upward and downward movements in the index and expresses it in the range of 0 to 100. 2. Charts. Charts include various hills, slopes, curves that develop on a chart over time and reflect some major and minor changes in the pattern. Some of the chart formations include triangle, rectangle, head and shoulders, double top and bottom, sources V. 3. Gaps. A gap represents the area on a bar chart where no trading took place. Up gap, it is formed when the lowest price on a particular day is more than the highest price of the previous day. Down gap, it is formed when the highest price of a certain day is less than the lowest price on the previous day. Numbers. Various number of theories are used in technical analysis, like Fibonacci theory, GAN, stochastic oscillator. This indicates the overbought or and undersold condition. It uses a scale of 0 to 100%. Fundamental analysis. It is the one where the current economic, political, financial situation of the country of currency is studied. A country's economic and political condition depends upon many factors like the interest rate, unemployment level, exports and imports, per capita income, percentage of the population living above and below the poverty line, inflation, trade relations with other countries, tax policies, etc. A fundamental analyst studies and evaluates all these factors before coming to any decision. Thus, it helps in long-term decision-making and making profits in the short term by extraordinary developments. Some of the indicators that help in the fundamental analysis include: 1. Gross domestic product. It reflects the total market value of all the goods and services produced in a country during a given year. 2. Retail sales. This reflects total receipts by all the retail stores in a country. 3. Consumer price index. It reflects the change in the prices of consumer goods. 4. Business cycle. It reflects various phases through which a business passes. These phases include expansion, peak, recession, depression. 5. Monetary policy. It controls the supply of money in an economy. Trading successfully needs knowledge, time and understanding of a market. You cannot earn continuously in a Forex market due to its volatile nature. Thus, as a trader, you should try to consider both technical and fundamental strategies of Forex trading and make decision based on market expectations and trends. Try trading with money that you can afford to lose without any regrets. Trade with logic, and if you are not sure, quit and take rest for some time. Best place to learn technical analysis training, fundamental analysis training, options trading, Forex trading, commodities trading, stock market training at NCFM Academy Hyderabad.in. NCFM Academy Hyderabad number 406 Annapurna Block, Aditya Enclave, near Maitravanam, Amirpet, Hyderabad, India. Mobile number, +91 7702486328 landline, +9140 48560292.